Hello, everybody. It's another Saturday at 8 o'clock, which of course means a Saturday night stream on the Cash Flow Kings.
That's
Now,
damn straight.
before we get into this, of course, we'd really greatly appreciate if you could share the channel with anybody really at this point. We're desperate for clicks, money, and attention, and all of that. But in all
Right.
seriousness, we're trying to get the channels, rocking and rolling here, and the more people we have in here every Saturday, the better. So greatly appreciate that. Fiscal, do you want to shout anything out before we get started here?
Oh yeah. Just want to remind everybody, subscribe to my channel. I'm actually right on the edge of having 800 subscribers. That's 80% of the way to the big 1,000 to be in the big boy partnership program with YouTube.
Yeah, he's on the edge of glory, guys. So we gotta help him out.
I'm getting edged. If you could just help me out a little bit. I mean, wait a minute.
Oh,
Wait, phrasing. What I mean to say is, it hasn't even been a year yet. I've only been at this for a few months. Already have over 200 videos, by the way.
yeah.
And I enjoy
Dedication.
it for. Hey, it's a grind in the beginning, right? But as things go,
Enjoy the grind. It isn't a grind.
Yeah. You get better as you go. Thumbnails. I have the best thumbnails, which we'll have something on that later, right, Ryan?
Yeah.
Yeah.
Yeah. We will. Trust me, we will.
Yeah, but yeah, really just help me out getting to that. I feel like I'm on the home stretch, so just help me out with that, and I'll love you for a very long time.
Speak of the devil, Dividend Dude is in here.
Whoa!
See the excitement come on, the glare both of our faces right now. Good to hear. Dividend Dude, there's been a rumor that you may be on the stream next week, so be prepared for that. But we have a lot to get into tonight. We have a new segment coming up this week. After this, we're going to record it. We're just going to talk about the stocks that we bought during the week, just give our quick thesis on it and move on. It's going to be a fun series and a bunch of new stuff coming this week for that, you guys. So a lot of good stuff coming. Fiscal.
Yo.
It's been an interesting week in the stock market, to say the least.
Yeah, it certainly has, sir. It certainly has.
Accusations are coming out left and right that you're investing in, falling knife companies, cigar butt companies. Some would even say,
yeah.
What would you say to those people critiquing you?
Well, I would just say that some of the companies that people right now, without any kind of dispute, say these are the highest quality businesses to invest in today, your Apples, your Microsofts, etc. There were times in my lifetime, granted I'm a little older than some of you, but in my lifetime, I've seen times where people thought Apple was a joke. And it wasn't just like 1 quarter or 2 quarters. There were years and years and years where Apple was seen as a joke company. The thing that turned them around was actually MP3 players and their innovative iPod, which wasn't the first MP3 player, but at the time it was definitely the most popular and the best. And iTunes and the iPod turned it around, and then the iPhone changed everything. And that wasn't really that long ago in terms of my lifetime.
Yeah.
And Microsoft, basically after Windows XP, they hadn't really done much for a while. Google had started to come out with some things that were comparable to Office, like, Google Sheets example, like people thought might replace Excel, and people thought Microsoft was for the dinosaurs too at a lot of points. So, and yes, the stocks at certain points fell and it didn't look great. But that's just the thing. If you had bought at the time when things didn't look great in those companies back then, how would you be doing today? And I'm just using that same logic in a lot of the companies I buy. Like Intel, undisputed king of kings for for processors and chips in like 1999. And then after the dot-com bubble burst, everybody said, Intel sucks now. AMD is going to kill them. And that's been the case for 20 years now. But if you look at what they've been able to produce, bottom line wise, and what they're investing in for the future, I think that they could get their, they are in fact likely to get their second win, much like Apple and Microsoft did before, right?
Yeah.
that's just one example. Another is, Walgreens, which
Walgreens has been on pins and needles, no pun intended there.
they're getting beaten up real bad. And I understand, like, multiple bad things have happened to Walgreens, but a few years ago they traded at some, like a mature, built out, slow growing retail business would, 15 or 16 times earnings, and not really much of a premium, but not much of a discount, because they're a big, stable, slow growing company.
Yeah.
But suddenly, like, if you look at what you can expect for like a normal level of earnings, they're trading at like 4 or 5 times what you could probably expect their earnings to be when things don't suck, right?
Yeah.
And I just think things are probably more likely to get better in the future for Walgreens.
With Walgreens, you think that all like the bad things that have happened to them recently, that's kind of been a result of the market not rewarding the best of the best businesses. You know what I mean? Like the Costco's, all the companies that are trading, crazy multiples and premiums, which I mean are great business models overall. But you think they're just being punished for not being the greatest business model, along with all the other things that have obviously happened?
I think it's partly like, yeah, they don't necessarily get a lot of great press, for what they are. And I think people see more growth potential with something like a Costco. And Costco has great PR. Like, everybody loves Costco. Like, people go to Walgreens, but like, I don't know if people are like enthusiastic about going to Walgreens, if that makes sense.
Unless you're a drug addict, I don't think so.
Nice. Yeah. I mean, unless you're a shoplifter, I guess, right? Then you're
That's
pretty
Target.
you're pretty hyped to go to Walgreens. But yeah, I think some of the issues Walgreens has right now are shared by a lot of other big retail companies, and I think collectively they will figure some of that out. The shoplifting, for one, right? Another is just like, hey, there's a lot of uncertainty when the CEO gets kind of shoved out of the picture, to put it gently, all of a sudden, randomly. Like, that's gonna worry people, and rightly so. Like, I wonder what the future is going to be as far as who they're going to pick to replace Rosalind Brewer.
And I don't think the market likes uncertainty either, especially right now.
It definitely doesn't. And I think once they pick a successor, and if it's somebody that is well regarded and well respected, I think we could see a little bit of that fear ease up. But I just personally think that Walgreens is a mature enough business with enough existing financial power that they can get through these bumps in the road and come out better on the other side. That's just, where I sit with it.
And I will say this, if you are making fun of people for companies that are falling in stock price and even investments, don't make fun of them after like a year or two's performance. Like, wait at least 10 years, 20 years, and then kind of like wait to bring out the insults out the pocket from then, I'm just not huge personally on seeing people, insult based on like recent stocks performance, because I've had that a little bit recently too.
For sure. Yeah. And that's the thing. Any stock can go down. Like the stocks that people love today and say, why don't you just buy more Apple? Why don't you just buy more of this? They've all been down at some point.
Yeah. Speaking of Apple is now trading in the $170 range, which Dividend Dude has had a call out for, which is appealing for. I wonder where that number came from. But no, seriousness, Apple's been on a bit of a dip recently, as of the entire market. It's at 171.21 right now. I know you're obviously way more, value oriented than me. Where I think we've talked a little bit about where we'd like to get Apple. Where would you like to get Apple at ideally for you?
My revised target, probably in the 120s, 125, 120, somewhere in that range is where I would be, really interested. I might consider, assuming I've got enough cash to do so, might sell cash secured puts below 130, something like that, and get assigned in the 120, 125 range. But I'm really not like, I know that Buffett and Berkshire, they're always adding when it's below 140. So
Yeah, Dividend Dude doesn't like that 120 call out range.
yeah, I mean that's just that's just based on the future cash flows of the business.
Because what is a business? A business is the present value of all future free cash flows.
Every investment is the present value of all future cash flow. Yeah,
Yep.
yeah. That's the everything money slogan right there.
Yeah.
But it is generally true, right? Like, if you buy, for example, like a rental property or something to rent out, and it makes you $1,000 a month, do you care if home prices drop in half if you can still get that same $1,000 a month and you plan to hold on to it for the rest of your life? No.
Yeah.
Now, in fact, if that neighborhood's house prices fall in half, but you can still get the $1,000 a month, you probably want to buy more houses in that neighborhood, right? Because you can get more cash flow for less money. It's really quite simple.
Yeah. Texas Roadhouse. I've had some conflicting thoughts, but it's more leaning towards, buy now. Have you ever had, I believe we might have talked about this, but have you ever been in a weird position where you buy a company, but then like it goes down a little bit and like not that it went down, but like you're just not that enthusiastic to completely buy more. You're in the fine line between your buying and, kind of like I may have fallen into the over diversification trap.
Like you're sitting here wondering, why did I even buy this thing in the first place, kind of thing.
A little
Maybe
bit,
questioning a little bit.
not, a little not, because it's a good business when I keep looking at it like fundamentally, like it's return on capital employed, free cash flow
Yeah.
is all good, but it's a really small
No,
position right now. And it's
100%. So,
yeah,
yeah, like I have had probably a couple stocks where it's like I kind of just I heard a few good things about them and just like, oh, I'll pick up a few shares, and then I kind of looked at it later a little bit more closely. I'm like, wait, what the heck was I even doing in this? One of them is, and granted, I was only in this for like a few months back in 2021, and I broke even on it, but I have no idea actually how it's been trading. Ticker HBAN. It's a regional bank. Yeah.
I'll look it up.
Yeah, they were getting some positive attention from some people back in 2021. I think they were like they were definitely higher, I think, when I owned them, but like they traded flat for a while, and I collected a dividend or two and got rid of them.
That's what we call that realty income price chart right there.
Well, if I had held on though, I'd be down like 40% or something today. So
we can predict the future here.
Yeah, I mean, I'm like, I don't. It may not have been like the worst thing in the world, but it was just like, I was like, you know what? I don't even understand why necessarily I thought this was good. Other people said it was good, and I just kind of, thought, I mean, the argument sounds good, so I guess I'll do it. But when I started to get that uneasy feeling, like, maybe not. I don't know.
Yeah.
I was feeling a little bit like I jumped the gun on it, and so I just decided to take my money and go elsewhere with it.
Yeah, Dividend Dude, you're right with Texas Roadhouse being a good business. First of all, I didn't realize I couldn't buy fractional shares on it because with Schwab you can only do in the S&P 500, and I don't think they're in the S&P 500. So if I were to buy one share of Texas Roadhouse today, I'd be pretty much spending 25% of my cash supply right now. So I don't know, like it's weird. I'm not selling, that's for sure, because I'd be selling out at like a 10% loss already. I'm probably gonna buy more. I like in the 90s for sure. But it's just one of those companies where it's like,
Yeah, no, I get it. And I'll be honest, like lately there's been some rumblings that the immediate future may not be so great for like fast casual or steakhouse type restaurants. So like Texas Roadhouse is obviously is nicer than like an Applebee's or a Chili's or something, but
yeah,
it's kind of in that like the same kind of customer would probably go to both. And it's just if you're willing to spend a little bit more for steak that week, you'll go to Chili or Texas Roadhouse instead of Chili's or something.
Yeah,
but realistically, like it's in the same like the same like kind of middle class type people probably go when they just want something that's kind of casual but still a little nicer than just eating at home at the same time. And when disposable income gets restricted, like in a recession, maybe I could see some temporary bumps for Texas Roadhouse and
Yeah.
other types of restaurants in that kind of area. The real fine dining places and the like the lower end like fast food places, those tend to be the ones that are most durable during a recession. It's the ones in that middle
Oatly. Oatly.
area. What now?
Oatly.
Oatly. Yeah. Yeah, Oatly. I mean, I've heard in my comment section that I'm missing the
We'll
boat
get to
on
that.
Oatly.
We'll get
Yeah.
to that. We'll
Mhm.
get to that later. Before we get to this, I want to talk about before we get to the Airbnb comment, I want to talk about McDonald's.
Yeah.
McDonald's has actually been trading down a little bit recently, and it's an amazing business. There's no doubt about that for me. It's at
Mhm.
it's at 260 right now. It's fallen from its highs pretty much at that, they were trading near 300 for a bit, and it's fallen back down where I think it could be potentially, attractive for me at least, because I think McDonald's, I think I can get a market return with it, market beating return.
Maybe. I mean, here's the good thing about McDonald's. I would consider it like pretty heavily defensive, not unlike a Coca-Cola or a Pepsi.
Yeah,
McDonald's, when I say that, like it's the lower end and the very higher end do okay during recessions, and it's the middle that get compressed. Well, actually, those like middle people during a recession, instead of going to Chili's or to Texas Roadhouse, you know where they're going to go?
McDonald's.
McDonald's. Exactly.
Who wouldn't?
You saw this actually in like the early 2000s, like after the dot-com thing happened and during the crisis in 0809. Yeah, you definitely saw like if you couldn't really afford or didn't feel comfortable with the amount of money you'd have to spend at like a sit down restaurant, you'd at least every once in a while get your fix at McDonald's for some burgers and fries,
Yeah, but I think I think for me, it's becoming. I like it if it were to get 250s, 240s to continue adding a little bit. It's just such an amazing business, and the real estate portion, technically with the
Yeah.
fees they collect, I like it a
And
lot.
the franchise model is really great for shareholders because each of those franchisees they pay royalties,
Yeah,
they pay like all the burden really of like the frontline operations, except for the corporate owned stores, which I'm sure there's a few, but the franchisees have to really bear a lot of the burden, and the company and the shareholders really get all the benefits.
indeed. All right, Airbnb. Airbnb joining the S&P 500. Would I buy fractional shares? I gotta take a look at their financials right now, but from a business perspective, I'm not 100%. I have enjoyed my experiences staring at Airbnbs.
So I'm gonna. So I don't think Airbnb is necessarily a bad business, but my question is, how investable is it? Because they've got they've had growth in the past, in recent years, of course, right? But I mean, and I don't know if anybody else has noticed this, but the short-term rental market in a lot of areas that people want to use short-term rentals, it's really saturated in some areas.
Yeah.
And it's getting to the point where a lot of local governments view Airbnbs as a nuisance and are trying to regulate them.
Can I tell a story? It's a crazy story. It involves Airbnb too. So don't dox me here, guys. Well, we have an Airbnb down our street. So for X dividend dad, don't dox me. But so we basically have an Airbnb down the street, and our neighbors have been trying to get it shut down forever now. And this lady, she's kind of an outcast. I don't want to say nobody likes her in her neighborhood because it sounds mean, but nobody likes her. So like a lot of times we'll get like random cars or like, you know what I mean, like some of the hood parties. People, it's a middle class neighborhood. It's, I don't know, 60, 70, $80 a night. Very easy to rent out for a potential function. So one night there was a function going on, and let's just say some people from the more inner city, they rented out the apartment, and let's just say a few things might have been floating around, in their drinks or whatever. There was a giant fight, and their house is probably, it's at the end of our block, so it's probably 15, 16 houses down. It escalated. There was a giant like street fight, and there was a knife found in our front yard the next morning. The cops were called, so I could definitely see your perspective and like why, in neighborhoods they are seen as kind of a nuisance, like especially in suburban. So
yeah, it's, and like one of the more popular types of unit to rent out on Airbnb are actually condos, because they're kind of like a little apartment, because it resembles more closely like a rented room or whatever. It's inside a building in a lot of cases. But what happens is the neighbors in the condo, because the condo associations have bylaws, because a condo association is sort of like it's like a legal entity, right? And the board of the condo association can ban rentals, or specifically short-term rentals, if like they can get like enough of the owners on board. And then if you happen to own a condo just specifically to rent it out on Airbnb, you can get screwed basically by the condo board. And so condo boards are fighting back, homeowners associations are fighting back, city governments are fighting back, like to try to clamp down in some areas on Airbnb. So if there's so many out there that people are finding it to be a nuisance, I think it means market's pretty saturated. I wouldn't be so bullish on the growth. Like say 3, 4, 5 years from now, I would say they're probably not growing at the rate they are today.
Yeah. And for me, like my portfolio, like I'm not particularly like, something's got to be really good for me to like add anything new to my portfolio. I already have a lot of positions. Like I would say the only thing I'm really looking at like seriously right now, UNH, it hasn't hit my price target that I like to get it at. So
yeah, if it was me, like I understand, the appeal of UNH because of how well they've done, but I would probably consider getting into CVS because they own Aetna, and expect for Aetna to be the thing that drives their growth more so than their retail. Also, CVS does. There's CVS pharmacies inside of Target stores. They have like a business.
I'm already getting my exposure then.
You guess you could say that.
Oh no.
That's actually where I go. Actually, my preferred pharmacy is actually inside a Target store. So yeah, your next dividend check, I guess you can thank me for my Target trips.
Thank you. Estee Lauder, I don't know. Jordan, tell me Estee Lauder's brands. They own a bunch of high-end stuff, I know that. Dividend, dude, we're going to go over your holdings. There's been a lot of talk from you, and we're going to quickly and briefly go over your holdings and share brief thoughts. This should be an interesting segment here.
Estee Lauder is cosmetics, so like looks like L'Oreal. No, second largest after L'Oreal. Perfume, hair care.
Yeah, they own a bunch of high-end brands. All right. Dividend, dude, where's your portfolio? Oh, here we go. Portfolio update 1.
Yeah, and just like I thought, it's a bunch of stuff I've never heard of before.
All right. Skip the ad because it's not my video. All right. Pulling it up. All right. First holding. We got Apple. I think we already know our thoughts on Apple. I like Apple a lot. It's a solid holding.
Yeah, it's a great business. People didn't always think so, but it's certainly the market has figured it out today that it's great, and it's
Yeah.
priced appropriately for being great.
CVS.
So I like CVS both as like the retail side of things, and because of their acquisition of Aetna. My experience using the CVS inside Target, I was able when the vaccine and the boosters and stuff were a big deal. That's where I got all that done, was at the CVS inside Target. Nothing but good things about my shopping experience there, and their financials look pretty good. And they may actually even be slightly undervalued today, potentially.
I have no comment on CVS. Disney.
Disney. Well, one thing I will say is Disney actually does have a moat, unlike some other companies. And like, out of all the companies in entertainment, so I'll sit here and I'll say, I'll acknowledge like Paramount isn't a moat. Comcast, at least in their entertainment portion, definitely isn't a moat. Disney, though, like with all the things, I mean, they have Star Wars, for crying out loud. They're a moat.
Yeah, Disney. I mean, like it's one of it's. I talked about like being deep in stocks. I don't know particularly if I didn't own Disney right now if I'd want to invest, but at this point, I'm just kind of, I'm pregnant on Disney. I'm
probably undervalued. They're probably undervalued, but I don't know.
There's a lot of risk.
So Disney is one of those companies. They're like, if you've ever I saw a somebody put together this like infographic. It's like a giant like chart of all of the different businesses and subsidiaries contained within Disney. It is so complex. You better.
Oh, I've seen that before.
Yeah. It's insane. Now, it could just be as simple as, can they get their margins back to pre-pandemic levels? And if so, you print money. Yeah, like that's a pretty simple way to look at it. And it seems like analysts think that'll happen in the next few years. But yeah, I don't know. It's sometimes what seems like a great deal, the bigger they are, the harder they fall in some cases too. So it could still stay tough for Disney for a while. And I don't know why their margins still suck. That's the thing. If I understood why they still suck and why they haven't recovered, I might feel better getting into it. But
yeah,
I don't know that. So it's a question mark for me on buying it. But I don't have anything against people who are confident in Disney's future, because they've shown that they can last a century. So they'll probably still be here long after I'm dead and buried.
Shout out to Frank for getting in here. Thank you, Frank, one of a loyal viewer. He also gave me a super chat on my channel, so greatly appreciate that, Frank. Frank, also contact me. I'll give you like the perks and benefits, whatever. I want to make sure you get that. All right. We have questions regarding Disney's moat. They have really good. Is their brand getting weaker? They have a lot of iconic brands.
I would say like there is an argument. There's an argument right now that maybe their moat is narrowing, but I don't think anybody has like the brand loyalty of Disney fanatics. I don't think is going anywhere anytime soon. Like, it's true, maybe some people in certain segments of the population are souring on Disney, but there's those diehard Disney fans that go X number of times a year to either Disneyland or Disney World, who go see every new Disney movie in the theaters. Like, there are some really, really like just completely dedicated people that are absolutely passionate and fanatical, that you will never get them to stop spending money on Disney.
Yeah.
It's sort of like Apple in that way. Like, people who love Apple, like if you ask them to give up their car or their iPhone, they'd rather give up their car. And there are some people who feel that strongly about Disney, and not every company, I think, has customers that feel that way about them.
You're right. I would say this with the Disney. Would you say that Disney's brands, all the brands they have today, they're obviously a powerhouse, but would you say they'd be stronger 10 years ago before they got in all the political drama? They've gone woke, you could say.
I would say about maybe 3 to 5 years ago, they were probably at what people would say was their absolute strongest. The MCU was at its absolute peak. The new Star
Yep.
Wars movies, like they were doing like Rogue One and the trilogy sequel and everything like that. Like they seemed absolutely invincible then.
Yep.
And the pandemic like cut their legs out from under them in a lot of ways, like at least financially. And it just seems like, people were really bullish for a long time on streaming, but that hasn't turned profitable yet. Their margins haven't recovered. And it just seems like they're in a really weird place right now.
Yeah. Hold and pray, as I mentioned. I would like to confront you, Dividend Dude, on O and Kroger on the chopping block. First of all, why would you add to Realty Income if it's on the chopping block you bought this week? And two, why Kroger? Because I've been hearing some Kroger slander recently, and I'm standing my ground. I think Kroger is a great business. I think it's a B/A tier company. I think they're just consistency with the free cash flow is the big thing for them.
So Kroger obviously has like a grocery store. They're going to be affected by a lot of different factors because there's a lot they sell a lot of things that are, kind of commodities. So like any kind of temporary price fluctuations affect what they have to pay, and they can't always, like, for example, like let's say there was some kind of really bad banana harvest. Could they suddenly, to offset it, charge like $8 a pound for bananas? No, people probably just wouldn't buy their bananas anymore. So like sometimes things happen like that and they have to eat certain costs. But I think for grocery stores, like Kroger is pretty, like I would rather own Kroger than Costco personally.
Like, what do you like? Any, like, if they were both at the same valuation?
No. I mean, at
Oh,
today's.
okay. Oh,
Yeah,
that makes
at
sense.
today's. Yeah. Like obviously if Costco fell in half or something, I might I might rethink that. But correct me if I'm wrong, but is Buffett not in Kroger?
He sold out. He got good gains. He sold, yeah.
Yeah. And that's the thing, like right now, my only issue with Kroger is I do think it's a little bit pricey for what it is. I was strongly considering it last fall when it went from like 51 down to 43, but it just never quite got cheap enough for me to want to really pull the trigger on it.
Yeah.
And, I would say Kroger is one of these where if it went down, I don't know, like a good 20% or something, I'd probably be looking at picking some up again, but it's never quite gotten to that threshold where I thought it was pure value. So, but I do think it's a great business, and yeah, doesn't deserve the hate. I don't know if I think that they should go through with acquiring Albertsons, and I don't know what the status is on that, but still good company, pretty well run.
All right, I'm gonna hit you with a checkmate here, Dividend Dude. He says he's adding Realty Income because he thinks it's severely undervalued and will do well long term. I'll sell them at the right price. Why would you not put that money into a company like Visa right now, which you could make the argument that that's at a fair price, and let your compounding do its work now, rather than having this be more of a medium term play? With you looking to sell out of it, because obviously Visa is one of those companies you're going to be holding forever. But I just don't understand why you wouldn't, especially with the bit of a dip they've been on recently. Me personally. All right. Next holding. Crocs.
The mode of moats. Yeah. So I personally, I don't have a problem with Crocs. It may, at an 8x, yeah, it might be undervalued here, but at the same time, I guess I'm not really big in the shoe business. Like, if the one exception would be if Nike, for example, fell by 35% or something, I'd probably be very interested in Nike, but yeah, Crocs is one where I'm just like, I don't really know where they're going. I don't really care to know where they're going. I just think that I've got better picks that I understand a little better. I'm maybe I just don't understand fashion. I don't know.
I'll say this with Crocs. I don't know why you wouldn't just buy Nike instead. And I think we can bring that back to the point, because the same people that are saying that Crocs is better value than Nike or whatever right now, that same analogy could be made for Target and Costco.
Yeah,
Nike always trades at a premium. Costco
Mhm.
always trades at a premium.
Yeah.
I think that's I just kind of came up in my head right now, but that's an oddly same
Yeah.
comparison.
Well, I guess I would say it's like it's interesting to be so selective about when you care about value and when
Yeah.
it's a falling knife, right? That's right. It's like oh no, but it's a moat too, you see.
Yeah.
Yeah.
Yes.
I'm a little skeptical, you could say.
As for selling out of O for Visa, no, I was saying to use that capital that you put into O, and why not put it into Visa and let your Visa compound now? I just don't under. You could buy both too. I'm not against either, but
You know, O, I honestly, and here's the thing, I was saying, earlier this year we talked about O, right? And I said I thought it was a little overvalued and would be looking at it more if it dropped, right? Like I'm not denying that O is I thought O was high quality. Remember, we had this conversation. I said O is definitely high quality and may deserve some kind of a premium, but it's just still a little bit too much for me because I'm a nit about value. And that includes high quality businesses. I want to at least get good value on them when it's possible. And sometimes there are opportunities to get good value on quality businesses. And maybe Crocs is one of those opportunities to get good value on a quality business. But you can't at the same time say that anything that I buy is a falling knife and a cigar butt because it fell recently.
in 2 years.
Yet Crocs is both a value and a moat.
Yeah. Talk your shit on 10, 20 years. That's what I gotta say.
Definitely. Like
It's a long game.
I'm really happy, some years down the line to sit here and say, I will, if, for example, 10 years from now, if Intel stuff hasn't worked out, like if they haven't achieved the goals that they set out to achieve, and
No healthy competitive dividends,
and they're not, a better company in 10 years than they are today, I'll happily say, called that one wrong, but we're not there yet.
Also, I think it's important for a lot of people to kind of, would you like to kind of explain your investment strategy? Because I don't think a lot of people, like, we have much more different, strategies and like mindsets, I think, when it comes to buying stocks.
Yeah.
Like, you explain your situation and strategy right now, because I don't think a lot of people realize that.
Yeah. So, like, I'm really value focused, right? So I try to run conservative numbers. And so the numbers I run are often lower than what I think the true situation will actually be. I beat the companies up on purpose so that if they end up doing the same or better than what I think they will, than what I'm putting in, for my valuation, that I can then get a better than market return. So you'll see me use a discount rate of like 11, 12, 12.5% in a lot of cases. If that's like the appropriate way to try to value that company, you'll see me look at the tangible book value in a lot of cases. And some companies, yes, it's normal for them like to trade at a premium of their tangible book value. Most equity REITs actually do. Like Realty Income trades at a value that's higher than its balance sheet normally. So if it suddenly fell below that, I would consider that a potential value. That's kind of the basic premise with MPW as well. Medical REITs usually trade at a higher valuation, compared to their financials than what MPW does. The reason that MPW is down, there's negative perception, and some negative things have really happened to fuel that perception, and it's an opportunity for value. It's very simple, but it should be effective if I can take my emotions out of it and not panic sell whenever something gets more red than what it already is.
Watch Crocs this holiday season, and my response to that, I got the Grim Reaper. I got the Grim Reaper for that. Because I want to transition this to our next topic. There's been a lot of reports coming out saying that during Christmas there's going to be a lot less spending. Do you really buy in? Do you buy into it? Because usually I feel like the last couple of years there's been a lot of those, predictions or whatever.
Yeah. So, yeah, I do suspect that it's not going to be a very great holiday season for a lot of businesses.
Santa ain't breaking the bank this year, kids. I'm sorry.
What I can tell you, so we always see freight volume increase during the last, couple months before Black Friday and that kind of thing. And while I will say, you see that currently, you can see there's some extra things, being shipped more so than maybe a couple months ago. It's not nearly to the level of what it usually is. Now that could change and it could suddenly pick up in the next few weeks here, but just based on freight volumes in the ports and in the trucking, over the road trucking segments and stuff, look at how any of the big companies in that segment have been doing lately, and it's ugly. And that is a barometer for what's going out as far as retail goods and being distributed across the country. So if a lot of places aren't ordering as much goods, for example, Target, Walmart, that kind of thing, what do you think they're anticipating for the holiday season if they're not ordering a big surplus of goods?
A non-healthy competitive dividend. That's all I gotta say.
Yeah, right. So that's my take on it. Yeah, I do think there is something to that. Now, granted, there have always been, there's always the possibility of a surprise, right? People could, order way more on Amazon or whatever than people are expecting. But right now, it doesn't look good. That's all I'll say.
Yeah, not a very Merry Christmas, you guys. Crocs is the best margin people are willing to pay up for Crocs. Couldn't the same be said of Nikes though? Nike can easily, obviously Nike is those diehard fans. I think that will pay $500 for a shoe that costs $60 to make. They throw the Jordan logo on it. I just don't understand how it's any different from Nike.
Yeah, it may be that Crocs would get you a better long-term return at an 8x than Nike would at a 29. That could be the difference. Crocs might be a better buy today. I don't know. I've never looked that deep at shoes before, so
I don't know how we're comparing Crocs and Walgreens here. They're kind of I don't think they're the same business, whatsoever.
Yeah, it's completely different. It's apples and bowling balls.
Yeah. I'm also going to compare Crocs and Nike's free cash flow for you guys real quick, and then we're going to get into a very fun segment of ranking streaming stocks. All right, Nike's free cash flow. Going up on dividenddata.com, not the sponsor of this video yet. Nike's free cash flow. That looks pretty solid to me. Obviously, 2020, that's anomaly year, but that looks. I'm content with that. Crocs. I just don't see the consistency. This looks a lot like UPS's free cash flow. It looks a lot like it.
Yeah, that's
too
that 8
questionable.
that 8 PE, if that's based on like trailing 12 months, I'd be worried if they can keep that up.
I'm gonna pull up UPS's free cash flow just for analogy.
And I would bet that the market's probably concerned they can't keep that up either.
What I mean here is those, two big spikes in free cash flow, then EPS. Obviously, it's been here for a bit, so there you go. All right, I'm comparing a comp. I would not.
Yeah.
I just don't understand why would you not? Tiffany, tell me this right now. Do you think Visa or Crocs is a better long-term investment right now? Just tell me, Visa or Crocs? Weak ass argument. Oh, stop it. It'll keep up. It will continue to grow. Where's that going to come from, though? It's only 2 years. I'll believe it when I see it. Where's it going to come from? You obviously done your own thesis and research on it. Visa, Crocs has potential. I guess. There's just so much more reliability with Visa, though. I just don't understand why you wouldn't buy Visa. You put money into Realty Income, but not Visa right now, and you're not holding Realty Income long term. I just don't. Me personally.
Hey, I will give him this. I mean, analysts do show earnings growing over the next few years for Crocs. So, but yeah, I don't know if, the further you go out, it's fewer and fewer, but yeah, it might be a good value right now.
They'll have a 6P next year, Jordan. All right. Ranking streaming companies. All right. So we have S tier, A tier, B tier, D tier. Actually, we'll put F tier. C/D tier. So they put a few companies that aren't technically streaming companies. I don't know if you want to rank them or not. I guess we could.
So CBS is owned by Paramount, so we'll just call that Paramount.
Yeah.
Hulu.
That's technically Disney.
Hulu is actually jointly owned by Disney and Comcast, so why don't we call that one Comcast?
Yeah. Wouldn't Comcast be Peacock though?
Yes, Comcast.
All right.
But I don't see Peacock in the list. So
it's here.
Oh, is it? Oh,
yeah.
Well, would you look at that?
Become a channel member today, so Fiscal can buy new glasses, guys.
I haven't had a new prescription in a while, so yeah, I'm struggling. But but yeah, we can definitely just exclude Hulu then because it's not its own company.
All right,
HBO is under Warner Brothers Discovery.
Yeah, that's Warner Brothers Discovery. We got Netflix, Amazon. I don't know what QB is.
I don't know if
Google.
I don't know who owns them, but yeah. I guess having Google in here is a good idea too. So,
all right. So how this is gonna work, guys. I'm gonna name the company. I'm gonna name the company, and I want everybody to share their vote, what tier it should be in, and then we're gonna have a committee assignment here.
And this is only based on the streaming portion of the company, right?
Yeah.
So yeah, not
entertainment department.
So yes, Apple has the iPhone and the iPad. We're not considering that. We're only considering the Apple TV part of it. Okay. Yeah. Just so that everybody knows, so the rules are fair. Otherwise, Apple would just get S tier from everybody.
All right. We'll start with Apple then. Everybody share your thoughts on what Apple should be. Fiscal, what's your vote for Apple?
For just their streaming
entertainment.
Just their entertainment. F tier. I can't think of a single thing that I've been like, man, I wish I had Apple TV.
I'm voting C/D tier, and the big reason for it, one, they have Ted Lasso, which they've done surprisingly well with, and two, they also have they got they're expanding and branching into sports, which I think could be big. So my vote's C/D tier. Dividend Dude votes B tier.
Mm.
Jordan has no vote. All right, we'll go 10 more seconds on it. C. I think the majority here is C tier, C/D tier.
Yeah, that's about
It's-
where I expected on that one.
All right, Paramount.
I would give them B tier because they have Star Trek, South Park, SpongeBob.
They also have CBS football, which
Yeah.
I think is.
Like I think they're strong.
I think sports are big.
Yeah, I think they're strong. Maybe not the strongest. I've heard that their UI in the streaming app is like if you get the standalone Paramount Plus app, it's kind of not the best interface and stuff, but the content's pretty strong.
Yeah, we got B tier. Dividend Dude says B tier. I think B tier.
Yeah, I mean, I think it's one of those where like everybody has a show that they like or a program that they like, whether it be the sports or whether it be one of the old like Comedy Central shows. Everybody's got something they like from Paramount, I think.
Yeah, Paramount's going in B tier. All right, Disney.
You know, even though I barely use them, like I'm between A and S tier on
I am too, dude. I am too.
You know,
I feel like 5 years ago, totally S tier.
Well, the thing is, they didn't lose any content in the last 5 years.
Yeah, but their brand. As a business, their entertainment. What's our vote here? Oh, we got mid A tier. I think I'm leaning towards A tier.
Yeah, I think I can concur with A tier.
I'm saying 5 years ago B tier or S tier. All right, Hulu. What are we considering Hulu for?
You know, we could just exclude Hulu because it's jointly owned between Disney and
yeah. All right, Fubo.
Who owns them?
They're their own company.
Are they publicly traded?
Yeah, Jeremy owns it. F tier.
No, I have. Well, considering I've never heard of them, I have to go F tier.
All right, I will say this: we do have Fubo. It's very good when it comes to like live sports streaming. That's what we do it for. At least we watch, Sabres games, and I like to watch football on it. So I mean, it's a solid service overall. Like you get a lot of it's basically cable. We're getting. My vote's C/D tier. As a business, I don't know how it is overall.
You know, I'll go ahead and on your say so. I'll concur with C/D tier.
Hey, when you got Google dollars coming in every month, uncertified or anti-buffet, when you got Google dollars coming in every month, sometimes sometimes expensive isn't a word for me anymore. So, so much green in my bank account. It's the only color I know these days. With my $60 from ad revenue. Yeah, I'm gonna vote C/D tier. All right, HBO Max / Warner Brothers Discovery.
Honestly, like HBO is like Disney for adults. I think. Like, I don't know if anybody in the audience like has ever watched The Sopranos or The Wire or anything like that, but like that stuff is. Remember how big Game of Thrones was?
Yeah.
Like, I don't know. I think just like and it's not like the Discovery part doesn't have anything either, right? They've got actually some of the most viewed cable channels in their content library. So all that TLC stuff, the 600-Pound Life,
Dr.
Right?
Popper.
Dr. Oh, I do guilty pleasure. I watch her clips on YouTube a lot.
Don't send the feds over to Fiscal's house after this.
Yeah. Should I admit to that on camera? But no, seriously. Like just I would almost consider them S tier, honestly, for the especially for the HBO side. But I am an HBO fanboy. I'm not gonna lie to you there.
As a business, I hate Warner Brothers Discovery.
Oh yeah, I mean, I'm not touching it. I'm not buying it at all. Even though Michael Burry has a position in it, but he's the guy that called one big event
Yeah.
right, and
So
he's gonna get credit for it for the rest of his life.
It's got that Jeremy effect. I'm voting A tier.
Yeah, let's let the audience be the tiebreakers between.
Yeah, everybody vote your Nate. Everybody vote for Warner Brothers Discovery's content.
If they average below S tier, then we can just go with A tier for it.
Yeah. Or if there's like C or D tier, F tier, we'll go for B. The votes are on your hands, guys. I don't know what's going on here. He refuses to vote.
Wow.
That's one way to really solidify yourself in this community. That's all I gotta say.
Unbelievable.
Dividend Dude votes S tier.
Wow. All right, so he's got some good taste in entertainment then. Yeah. So I mean, I think that might tip the scale there a little bit, doesn't it?
Oh, we're going S tier for HBO Max.
Yeah, we had to have one S tier in here.
Yeah. Right? Speaking of S tier, Netflix.
Honestly, I would definitely say I use them pretty frequently. I would go A tier for Netflix. They have a lot of they're a lot more willing to be creative and experiment with different kinds of content, and I really like that. And they've come out with some really interesting hits. Squid Game comes to mind. What other network would have taken a chance on that one, right?
Wow, you really wouldn't pay extra for us. If this poor Fiscal here collapsed in his chair, he hit his head. We had medical bills to pay. You wouldn't donate.
If I had a Diet Coke overdose and just went into shock or something.
That's one way to promote the new channel. Yeah, I'm voting Netflix for S tier. I every time I load on a Netflix, there's so much stuff. They got the Rocky movies. They got Superbad on there. A ton of comedy movies. The Wolf of Wall Street.
I mean, it's solid for me. It's solid A tier, and it's one of the ones I use the most. I don't even have the HBO stuff, even though I voted it in higher because I like the user interface of Netflix so much and everything. So for me, Netflix is solidly A tier.
I'm putting S tier. I'm voting S tier. There's a lot of S tier votes. I'll say that.
Yeah, I mean they deserve it. They deserve it.
All right. Welcome to the S tier Netflix. Amazon Prime Video.
So it's one of those where it's like they've got a few shows I like, but not enough to unseat HBO or Netflix. I use Netflix the most. HBO has some of my all-time favorites to the point that they're almost irreplaceable in my heart. But Prime Video has The Boys.
Oh, and Homelander.
And if you don't put it in S tier, I will laser every last one of you.
I'm better. I'm stronger. I have better stocks. I'm better.
I can do whatever I want. I could buy a falling knife cigar butt if I want, and they'll love me for it. Okay, so I would put honestly, I would put them in B tier because there's a couple shows I like, but only really a couple that I'm really into as far as their original stuff. And everything else, is just stuff that kind of just cycles through and gets passed around. So, yeah.
Yeah, I'm voting B tier too. I rarely use it. We have it, but I rarely use it. Jack Ryan's entertaining. Jury Duty. All right, we'll say A, B tier. I don't know what Quibi is. Sling, what's that?
Sling is basically streaming cable. Basically,
I can tell you for that one. I don't know.
Yeah, I've used it. I used it temporarily, 7 or 8 years ago. It's nothing special. And I don't think they're publicly traded, but I could be wrong. But I know a couple of more on this list are.
We got Google with YouTube.
Yeah. So
Google's an amazing company. I love it so much.
So,
they're so nice to me.
For me, yeah. Keep it coming. Keep it raining, Google Daddy. With them Google bucks, them G bucks. So for me, I think there's no denying that the diversity of content is second to none on that.
Yeah.
But, you know, I would say that, like, it's also like kind of a crapshoot as to what you might get on a given day. And I don't know about paying for the ad-free. I don't know. Something feels weird to me about that. I know some people who do, and they actually love never having ads on YouTube. I would put it solidly in A tier. Like, I spend about the same amount of time watching YouTube as I do Netflix, if not even more, actually, since I actively use YouTube so much for making videos as well as watching them. So
I think I'm putting YouTube in the S tier for me. I use it so much, whether it be for like educational purposes, trying to learn, new stuff or whatever. I use it to listen to music too, remixes, high frequency music. So I like it. S tier for me. It's so unique, and I'd say you can even say they have a moat.
Yeah, I mean, I wouldn't be salty if it ended up in S tier, but like for me, it's A tier. Like factoring in like YouTube TV is, I'm thinking more along the lines of like a paid service compared to the other paid services. More so than like thinking of it as just a purely free experience. So
we're going A tier for YouTube.
I think A tier. I don't know what the audience wants. Are they voting A tier or are they refusing?
They're refusing to vote. They're pulling a 2020.
Unbelievable.
All right, Peacock. This is the last one. Comcast.
So honestly, the only thing I would even consider getting Peacock for is probably The Office. So probably C tier for me.
I mean, like Peacock and I think Comcast's a good business overall, but
yeah, the business is great. It's one of my bigger positions. I've got 200 shares of Comcast, but Peacock itself, like one of the big reasons I own Comcast is for one, the chance that they could sell their piece of Hulu to Disney for billions and billions of dollars, and two, that their legacy broadband internet business is basically a utility and has a lot of stability to it. Plus, yes, they've got Peacock and stuff going too. Oh, I guess they also own Universal Studios, but I don't know. For me, it's still C tier because Peacock is probably the weakest of the streaming services that I would even consider getting. I would consider it if I really, really, really wanted to binge The Office, but then I would probably cancel when I was done. So
I'm with you too. Yeah. I mean, they also have like Sunday Night Football. Actually, they don't technically. Well, they do, I guess. So I'll put in the C tier.
Yeah, it's just okay. It's not like amazing.
And those are the ranking of the streaming companies. Let us know.
I'm surprised nobody ended up in F tier, but
yeah,
guess we could find something nice to say about all of them.
Yeah, maybe we could put Google in the S tier for our higher CPM. So that's pretty much wraps it up. If you guys have any last questions, comments, or concerns, let them in the comments section. We're gonna record after this thoughts on buys for the week, so look for that coming up this week. Fiscal also has a new series that. Would you like to talk a little about your new series this week?
Oh, yeah. So we're going to have basically I'll be recording a separate video that goes a little bit deeper on something that we discussed in the stream. and we'll be calling it the Fiscal Focus. It'll be here on the Cash Flow Kings live channel.
Yep.
It'll be a mid-length video format, probably in the 8 to 10 minute range each week. Just taking something where we only scratch the surface and just going another layer deeper for you all. Yeah.
This is the deep. This is our deep arc.
We'll be getting pregnant on it.
Yeah, this is our pregnancy arc with the stocks crashing. So thank you again if you've made it to this, end of the stream. It really does mean a lot. If you want to go the extra mile, without donating, obviously, we need money. But in all seriousness, yeah, join Discord, link in the description. We actually just hit out 100 members on mine, so thank you all for that. And Fiscals has been going at a rapid rate too. So
yep,
we're doing it, and we're getting hate. Oh, we didn't do our hate comments.
Oh, should we?
We got to do that. Yeah, I pulled up a few. It'll be real quick. All right. Moving to Oatly. Oatly's the new hot stock on the block. Why would you not mention all the partnerships in Germany and in China across thousands of coffee shops? Oatly is sold in Starbucks, along Starbucks. Why do you not make any mention of these positive catalysts? Oh, well, it hardly matters. Your channel doesn't get much attention.
Yeah, that one hurts, man, right in the heart.
That was actually a little mean. I gotta be honest. When I saw that, it was a little mean. And we got one more.
Bag holder spotted.
Yeah, you didn't make a Tesla video, and then we got one more on your AMC video. Is it on your AMC video?
Yeah.
No, it's wait. I'm looking.
I sent one on the AMC video too. I actually got more. I got like a little surge.
Oh, it's on the Alibaba.
Mm-hmm.
Yeah, you got the. They all went from my videos to yours after the Tesla videos stopped blowing up a little bit.
Hey, they needed somebody to blame for their bag holding.
Baba is a scam stock. Would you care to provide any reasoning for that statement? Wake up.
Yep.
LOL. You got a rebellion going against you.
I do like it when somebody chimes in with the LOL at the absolute absurdity of these psychos. But no, there was one on the AMC as well.
AMC?
Mm-hmm.
I gotta look. I didn't see it.
It was it doesn't, for some reason, it doesn't always come up on YouTube.
Because doesn't YouTube filter out the wait. Oh, I found it. All right, I didn't put it in the new.
This is probably the best one.
This is gold.
Yeah.
Because I saw this morning. Looking at the thumbnails, how can anyone take this clown serious?
I know, right? And it's like, hey, man, if you're clicking on the thumbnails, it means they're doing their job. So I'll keep that up. Thank you very much.
Yeah.
Yeah.
As for me, I didn't get anything crazy this week. Thankful. I don't know whether to be thankful or not for that, but that pretty much concludes the stream, everybody. Thank you very much again if you made it to this part. Thank you to Dividend Dude. Thank you. Thank you to
appreciate the participation, buddy.
Yeah. Thank you to Rack1891. Thank you to Frank, who's watching back right now. Thank you to Anti-Buffett. I might have mentioned his name. Thank you to Jordan, of course, to Bulo. Thank you to anybody watching it back. We greatly appreciate it. And everybody's they're all commenting now. They're all making fun of us.
The hate comments bring everybody to life. I love it.
Yeah, everybody's back. All right, thank you all, and of course, do Dividend Stocks Drugs. Have a good one.
Later, everybody.